How's it going, everybody? It's Stas here. So the markets did pretty well today. The S&P and the Dow went up 0.4%. The NASDAQ 100 went up 0.2%. And the Russell 2000 went up 0.7%. So today, we're going to break down some charts, my thoughts on the markets, stocks I'm looking at right now. So sit back, relax, go down below, get your $50 from M1 Finance. Literally, all you have to do is use my link, deposit $100, and we each get $50 to invest with. And you guys can check out my Patreon if you want all my real-time moves, plus a bunch of exclusive content and access to me throughout the day. All of those are linked right down below. And with that being said, let's get right into the video. So today, SPY ended up hitting a fresh all-time high at $441.80. And you guys can see here on the intraday chart, despite us hitting that all-time high, we're selling off pretty drastically after market hours. Look, we closed at 440.65, and now we're trading at 439.35, and that is because Amazon stock is absolutely tanking right now. Let me show you guys exactly what's going on there. Amazon is down 7% after market hours, which is pretty crazy, and we'll talk about this stock's earnings, which just came out in a couple of minutes. But you all know big tech, they bring down the markets and they bring up the markets. It works either way because they have such a big weighting on the overall markets. And out of curiosity, let's see if any of these other big tech names are moving down after hours. Oh, yep, there we go. Apple is down about $1. Microsoft is probably, okay, Microsoft's not really doing anything. Facebook, excuse me, guys, Facebook went down 4% today. It's down even more after hours, so that could be dragging it down a bit. And Google is down a little bit as well after hours, about $20-$30. So again, like I said, these stocks are about 30%, 25%, roughly. It changes as market caps fluctuate, but they're about 25-30% of the S&P 500, which is a massive, massive weighting. And look, I mean, on the 4-hour chart, we're still uptrending. I'm not worried. The bulls should not be worried. This is simply a pullback along the uptrend. And on the hourly chart, you guys can see, and as long as we hold above 437, 438, the all-time high from the middle of July, this is going to be good for the bulls. It's a very healthy pullback, and around the 180 SMA, which is where we are now, I would not be surprised if we were to see some sort of bounce back, whether it's tomorrow, next week. I wouldn't be surprised if we bounce back at 437, 438, which again is where we are right now on SPY. And pulling up QQQ, this is getting hit even harder after hours because this is the tech-heavy ETF. This one's down about 0.7% after hours right now, wiping out all of the gains from today and some. And you guys see on the 4-hour chart, this is right around the 50 moving average now, which if we don't hold that point at 363, and mind you, we failed at 365, which is not a great sign. That was the high point from the middle of July. So now that we're at 363, if we fail at the 50 SMA, we could be going down $357, maybe $355, right around the 180 SMA on the 4-hour chart, and right around those lows from earlier in July and in the middle of July at about 355. So overall, those are some key technical spots I'm looking at, key technical points when it comes to the QQQ and SPY. What are your guys' thoughts? Let me know down below in the comments. Did you buy anything today, sell anything? And if you guys are enjoying the video, you know what to do. Smash that like button and make sure to subscribe so you don't miss out on any content I'm putting out here on the channel, and hit that notification bell so you're notified every time that I do make a video. So now let's talk about Amazon's earnings, which kind of surprised me. I'm not going to lie. You don't really notice, or not notice, but You don't really see a lot of the time these big tech names fall 7%, 8%, 5%. Yeah, you notice that. But 7, 8, 9, 10% after hours in either direction, right? That is a pretty big move. And Amazon wiping out 7% of its stock value here. We're talking about billions on billions. This is probably over, yeah, definitely over 100 billion in value. So a lot of value, shareholder value was lost here after hours. Now, will this last? I don't know. I don't have the crystal ball. I wish I did. Like back in the future when they got the, what was that little magazine called, guys? Dang it. Let me know in the comments. You guys know what I'm talking about. Where they went back in the future and they bet on all the sports games. I wish I had that for the stock market, I'd load up on options. I'd go crazy and we'd make a lot of money, right? But that's not reality. It's not reality. And no one knows what's going to happen. But as of now, Amazon is down 7% after hours. It's not good. EPS came in at $15.12 versus $12.22 estimated. So they crushed EPS. But the problem here is revenue. They missed on revenue, which is unlike Amazon. They did $113.08 billion in revenue versus $115.07 billion estimated. And like I said, that's unlike them. Typically they're crushing revenue. They're beating it by 5-10+%. But this time they missed it by about $2 billion and the stock's crashing. And let me see if there's anything else here. Okay, CFO says hopes Delta variant is stamped out. Economy continues to come back. Okay. Stock falls as pandemic sales boom appears to stall. But come on, guys, let's be honest. Even though, yes, the economy's opening up, yeah, I'm not buying this whole, Amazon sales are going to be down for forever. I mean, that's not really what he's saying there. Pandemic sales are stalling, but sure, it could be a short-term hiccup, but let's be honest. People are still going to be ordering on Amazon. Even though I don't order on Amazon, guys, literally, I do about 3 orders a year, literally nothing. I don't buy anything on Amazon. But I know people that do hundreds of orders a year, and that's not stopping. So, yeah, this could be an overreaction. Maybe people step in here and buy the dip, and us as traders, we could come and take advantage of this. I mean, look, we're oversold right now. We are in a falling knife, so keep that in mind. But as the dust settles, maybe we hold this trend that I just drew out here. And notice we're right at a higher low right now. If we hold 33.50 after hours, which very well could happen, if we end up seeing that, buyers step in here, we as traders, we could hop in and maybe even take advantage of this. And would I consider this a long-term entry point? I don't know. Probably not. I'd need to see Amazon, if I wasn't already in the stock, I would need to see it drop even more to get into this stock. I'm not looking to just hop in on a 7% drop. Well, now it's actually down about 11% from the all-time high. Maybe if it was down 15, 20%, that would be a decent time if you weren't already in it. And this is not financial advice, but that might be a decent time to add some shares. But me, at about a cost basis of $2,600, I'm not looking to buy more here. Now, if it went under 3,000, which probably won't happen unless the overall market corrects, that's probably where I'd start adding more to my position. But as of now, I'm holding on and I'm just watching it with both eyes peeled, guys. So let me know in the comments. Do you own Amazon? Are you mad about this? Are you riding, are you riding the wave out? What are you doing? Are you are you riding out the storm? Wrong analogy there, guys. But you know what I mean. Let me know in the comments. And Pinterest, oh man, Pinterest is down just as much, even more than Amazon. Jesus, guys, look at this. Pinterest, not only did it go down 6% on the day, it closed down 6%. It is down another, this is bad. This is so bad. It's down another 20% after hours, guys. Holy crap, that's terrible. This stock closed down 6%. It closed at $72. Now it's at 58.50 after hours. That is just abysmal, guys. They did EPS of 25 cents versus 13 cents estimated. Revenue came in at 613.21 million versus 561.88 million estimated. So they beat EPS, they crushed revenue, and with these companies, Facebook, Snap, Pinterest, we're looking at monthly active users and average revenue per user. These are two big metrics, and their monthly active users for Q2, they were about 454 million. That's up 9% year over year. So maybe the slowdown in growth of monthly active users is contributing to this just collapse of the stock. And the average revenue per user came in at $1.32, which is up about 90% year over year, 90% year over year, which I can't complain with that. But geez, guys, this stock is just getting obliterated. There we go. Look at this. I'm not sure if you all can see this, but as of July 27th, 2 days ago, monthly active users in the United States have declined approximately 7%, and global monthly active users have grown about 5%. So it's got to be it's got to be because of those monthly active users. What did I say? There's a headline right here that says Pinterest shares slide 14% as MAUs drop in Q2. This is what these companies trade on. It's not, well, it's obviously revenue, guidance, EPS, all that stuff, but it's heavily reliant on the monthly active users, daily active users, such a big metric. And yeah, it's crashing. It's bad, it's ugly, and it's perfectly in the trend. This has been the pattern over the past couple of months. We hit the high, we end up, or rather, we hit a lower high, hit a lower low, lower high, lower low. And by the looks of it, this is a falling knife, and we're probably on our ways to hit another lower low at about 55, low 50s, definitely possible. And if we somehow got to the high 40s, which I don't think it's going to get that bloody, but even in the low 50s, I might consider picking some shares up on just a very oversold stock, because even if the monthly active users, daily active users, whatever, they weren't that great, the stock still trades on technicals, right? It still needs to bounce back eventually. We're going to see some sort of relief rally. And if, again, we could get it at 55, 52, maybe we could position ourselves to make some money on the swing up, the reversal here, and we could make some money on that. So I'm looking at Pinterest closely for that exact reason. Upwork is another one, UPWK. They did EPS of 3 cents versus negative 9 cents estimated. Revenue came in at 124.2 million versus 120.24 million estimated. So they beat EPS by a nice margin. They pulled a profit there. Same profit as the previous quarter, 3 cents per share. And they beat revenue as well. And the stock is just, this is a pretty ugly chart. I'm going to keep it honest with you guys. It's very choppy. It has been, at least over the past couple of weeks, ever since the end of June. And it's selling off a bit. It's down about $2.50 after market hours right now. And yeah, you can say clearly there's a resistance at about 60. But we're uptrending, holding the both moving averages right now in the mid-50s. So maybe we get some sort of pump here on Upwork, maybe back up to the high from earlier today, yesterday at about 58, 59. So I'm going to be watching that dip fairly closely on Upwork. Although, honestly, guys, for real, I'm going to be looking more at Pinterest to see if we can get some sort of relief rally play there. I like that over Upwork. But either way, I'm gonna be watching both of those. Twilio also reported earnings today. EPS came in at negative 11 cents versus negative 13 cents estimated. So they beat EPS, and revenue came in at $668.9 million versus 500. I know you like the voice crack there, guys. Hold up. Jeez. And by the way, I'm getting better. My cold is almost gone. I'm feeling great. And I took a CV test yesterday. Negative results today, so that's always great to hear as well. But anyway, revenue came in at $668.9 million versus $598.37 million. So they beat EPS, beat revenue, and I'm not really looking to touch this stock, quite honestly, until it breaks out of this consolidation range, which it has been in ever since the end of June. So pretty much a month now. We've been trading between 405 and 375. So I'm going to set my alert at $405 per share. And from there, maybe we can catch a move up to about 440, 445, which was the high point from back in February. So I'm watching TWLO. Skyworks Solutions is another one that's tanking right now. It's down about $10 after market hours. They did EPS of $2.15 versus $2.14, so not too crazy of a beat there. And revenue came in at $1.12 billion versus $1.1 billion estimated. And by the looks of it, guys, this Head and Shoulders is still intact. We have the left shoulder, the head, the right shoulder right here, and the fact that now after market hours we're down $10, we're down a couple percentage points, this is a sign that we're failing at the neckline at 195, which again, we failed at the left shoulder neckline as well back in February at the same price, 195. This is telling me that there could be more downside in the very short term, maybe down to about the 180 SMA here on the 4-hour at about 180, which we're pretty close to that now. So maybe we get some sort of a rally around here. But overall, guys, I would maybe catch a move between 180 and 195, but I'd love to see it break the neckline, throw the Head and Shoulder in the trash, guys, and go to 205. That'd be the move I'd be looking to make, which from 195 to 205, that would be about a 5% potential for profit. So SWKS, Skyworks Solutions, watching that one like a hawk this week and honestly next week as well. And today we had the most popular, most loved company out there amongst the retail investors. I know all you retail investors, especially GameStop, AMC holders, you love this company. Just kidding, guys. Just kidding. Robinhood IPO today. Oh, man. This is down 8% on the day. And Stas, are you going to buy Robinhood? I got that question today. No, I am not buying Robinhood stock. I'm not interested whatsoever in owning Robinhood. Not saying they're a bad business or anything. I just don't like the business. I just don't like everything in terms of what happened with the retail investors, the whole scenario from months ago. I just don't want to put money in them right now. Maybe I will in the future. I'm not going to say I'm never going to invest in Robinhood, but as of now, I'm just not buying them. I'd rather put money elsewhere, quite honestly. And that's just me. And I'm sure a lot of you all will agree. And just today, guys, the company is worth about $30 billion. And let me give you a little tip here, or a little insight. The company was last valued in the private markets in September at $11.7 billion. So you're telling me since September, this company 3x in value? That is just crazy. I personally think Robinhood is overvalued here. And the truth is, guys, when companies IPO, it's a hard truth. And most beginners don't understand this. But when companies IPO, they go on the market, so the average Joe can buy them on the public markets. The private investors, people that were in from the early days, they're selling their shares to you. They're cashing out. They're making thousands of percent. Those are the people that are making a lot of money on IPO day. So that's a reason for me, not only with Robinhood, but I don't like buying in general on IPO day. I like waiting a little bit, let the dust settle, and if Robinhood were to drop down to the mid-20s, which again, I'm not buying Robinhood, but if it were even $20, then it might start opening up as a decent opportunity. And that's just how I roll. I don't like buying on IPO. I can't even remember. I don't think I've ever bought a stock on IPO day. I just never have. And the last one for today, and I'm going to be watching Robinhood obviously very closely here to see if we can trade it, but as a long term, not buying it, but that's just me. And the last one for today, which I did buy today, guys, is a competitor to Robinhood, SoFi, which I would actually consider as a long-term investment, but I bought it today as a trade, and I bought this at $15.90, and now, oops, it's down a little bit, down to about $15.30, but it's okay because when I'm swing trading, guys, I don't go all in right off the bat. I like scaling into positions, and now that I'm seeing SoFi approaching the bottom of this trend, we've held this level many times in the past couple of months, ever since March, right around $14.80, $15. We've held it once, twice, 3, 4, 5, now about 6, 7 times. I want to build a position here, and the goal is to ride this up to $18.50, followed by $20, maybe even up to about $22, $23 per share. And I understand this stock is very volatile. It's more of a risky stock. It's not something like a J&J or something that's boring, but it could provide a lot of return along with a raised amount of risk, which is why, again, I'm scaling into this, and I'm being a bit more cautious with, a tighter stop loss once I actually build out the position. But as of now, I like SoFi. I think there's a lot of potential here. We're going to be watching it the next couple of weeks. I want to build this up a little bit more. I have about 20-30% of my goal position right now, and we'll see where it goes, guys. I could be wrong. SoFi could end up going back to $10, and I might lose some money on this, but I think we're going to do well. And yeah, that's just my opinion, guys. So overall, that's it for this video. I hope you all enjoyed it. If you did, smash the like button, subscribe, go down below, drop me a comment, let me know your thoughts, and make sure to check out my Patreon. If you guys sign up today, you will be charged for this month of July, and you will be charged again on August 1st. So to avoid the double charge, you will be double charged, but I'll be able to refund you. The charge for today, so you're not double charged, because that's pretty BS. Why would you pay for July if it's already July 29th? That's just how Patreon works. I wish it wasn't like that, but that's just how it works. So if you do sign up today, shoot me an email at stas@stassurfest. I'll take care of you. I'll refund you. And yeah, you'll get charged on the 1st of August. So yeah, check out my Patreon for all my buys, sells, call outs, a morning update video. That's linked down below. And you guys can get your $50 from M1 Finance. All you have to do is use my link, deposit $100, and we each get $50 to invest with. And you can get 2 stocks from Webull up to $1,600, also with a $100 deposit. And all of those are linked right down below. So I'll catch you guys in the next video. Thanks again for watching, as always. And by the way, I made a video earlier talking about 3 other stocks I didn't talk about in this video. I'll pop it up here. Check it out. See you there. Peace out.